Paul Joy here, your mortgage consultant from the money market, your Amazon for mortgage solutions. Today, I want to talk to you about non-QM loans. What's a non-QM loan? A non-QM loan is a non-qualified mortgage. So you have QM loans. Those are loans that basically are sold to Fannie Mae and Freddie Mac, right? We have conventional loans, conforming loans, and then you have loans that are basically FHA and VA and USDA. Those are ones that are guaranteed or insured by the government, right? But today I'm going to talk to you about the non-QM loans. The non-QM loans are also institutional loans, right? But what's the difference between them and the QM loans that we talked about? Okay, I'm glad you asked. So let's talk about a few kinds of non-QM loans. Non-QM loans, you don't require a lot. You don't require any tax returns. You don't require any W-2s. And we don't need your pay stubs. So they're just alternative forms of financing. Right, so let's start with the first one. First one is what? Okay, you need bank statements. So we can fund your loan based on just the bank statements that you provide to us. This is actually very good for people who are self-employed, right? Self-employed people. So if you're self-employed watching this, yes, we can do a loan for you. Let's say you have a salon, a hair salon, and you're a cash economy or whatever, or you have a restaurant and you don't want to pay a lot in credit card processing, or you take a lot of cash in. This loan is good for you, right? Because we're going to look at your bank statement. That's all you got to look at. Look at a bank statement, and based on your bank statement, we can fund you. Typically, we're looking for 24-month bank statements. You have 24 months, then your interest rate is better than if you have 12 months. But guess what? We can actually do 2 months or 3 months of bank statements. We just look at your bank statements and look at that, and based on your industry, we can determine how much you qualify for. Well, just look at the expense, okay, ratio, right? Got it. Some of them can go as high as 85% or even 90% of what you're putting in your bank, right? So forget about your tax returns, forget about your pay stubs. We can fund you just looking at your bank statements. Okay, so that's bank statements. Hey, I actually want to talk about what they call the community loan. One of our lenders, hey, does community loan. That means basically all we need is 15% down if it's a purchase, or 15% equity in your property. And we need is basically your credit score is 640 or better. You can buy yourself a property. And we don't even care where the money is coming from. It might come from your relative or whoever. We all care is you got 15% equity in the property. That means 15% down. That's it. And you have 3 months of reserves or more. That's a community loan. My goodness. You can tell I'm excited about this, right? Because this is one thing that we're very good at. Non-QM loans. So I talked about bank statements and I talked about the community. Now let's talk about another one, right? P&L. Just that profit and loss statement. Hey, you can give you a loan based on your profit and loss. Can you imagine? You can put as little as 10% down. 10% down gives you a loan. Wow, that's amazing. It's America, right? We're living in it. It's a great country. Hey, and guess what? Some people think, whoa, your interest rate is going to be very high when you do this non-QM loans. No, their interest rates are not astronomically high. Maybe just 1% higher than if you were to do a full doc loan, right? So guess what? You can actually buy down this rates as well. That's amazing stuff. Okay, we also have what? The DSGR loans. That's another form of non-QM loan. DSCR stands for debt service coverage ratio. This is for people, for those of you who are landlords, okay, you want to have cash flow properties. So all I have to look at is basically how much cash is coming in from your rental. And it might not even be a ratio of 1. That means basically, ideally we want to make sure that your PITI, your principal, interest, taxes, and insurance is equivalent to your mortgage, right? If you get that, you get a better rate. But we even have what? A non-ratio, right? We have the non-ratio DSGR loans. It's exciting. I can go on and on and on, but for the sake of time, I want to say that if you're interested in this, please, why don't you just pick up the phone and call me, right? The number's right there. Or you can go to our website, and we're more than happy to sit down with you and see how you can excel in this, how you can take your portfolio to the next height. You want to refinance? or you want to buy, you want to increase your wealth, do not hesitate to contact us today. Thank you so much. This is Paul George, your mortgage consultant for life.